The problem we're going to do right now is problem 9-22, and it's on page F384. In this problem, we'll be preparing a classified balance sheet. The format we will be using is on page F-358. Once again, I have prepared a blank format to use so that you can see how to fill this in. Before we actually get into the balance sheet, Requirement A asks us how many shares of the company common stock are outstanding at December 31, 2005. As you can see on the screen in front of you, this is a simple computation. When you think back to your reading on common stock, you should remember that recording common stock always means that the common stock account contains only the par value of the common stock sold. This may be skewed by some other issues which we will address later in the class, but for this problem we are going to assume that all the common stock sold is outstanding. Therefore, we can enter the $400,000 that's listed for common stock in the book into the cell under common stock. We move over and then enter the par value of $2. The formula that I pre-entered divides the amount in the common stock balance sheet account by the par value and tells us that there are 200,000 shares of common stock outstanding. Requirement B tells us to determine how much the company got from the sale of its common stock. Again, from your reading, you should remember that when common stock is sold, anything paid above the par value for the stock goes into an account labeled Additional Paid in Capital. You will find that account a little more than halfway down the list in the book. To back into what was paid for the stock, all we need to do is add the amount in the common stock account. So we put the $400,000 under where it says common stock. Then we put the amount from the Additional Paid in Capital account under where it says Additional PIC. And the formula adds those to give us the total paid for the stock of $640,000. Now we'll jump down the page and fill in the balance sheet. For the purpose of this exercise, we'll use the above and below format, where the assets go above and the liabilities and capital go below. Sometimes balance sheets are presented in a side-by-side format, as we've seen in prior exercises and in earlier reading. Once again, the format has been created, and there are formulas to subtotal and total as we enter the numbers that need to go into the form. Starting at the top, go down the list in the book until you find cash. As you can see, cash is $124,200. When doing a problem like this, I would suggest checking off each number as you put it onto the form. So I've checked off the cash amount in the book. Next on the form is accounts receivable, just below cash, and the problem shows $212,000 for accounts receivable. Enter it and check it off in the book. After that, we get inventory of $338,000, and then jumping back up towards the top of the list, we'll get prepaid expenses of $9,800. Since there is already a subtotal built in there, you see the total current assets of $684,000. Moving down the form, we next look for what's in the land category, and that's a little more than halfway down the list at $490,000. Then up a couple lines to building, and that's $875,000. And right under the building is accumulated depreciation of $271,000. Notice that the $271,000 has to be put in as a minus. That's the way the subtotal has been done. With all the assets in place now, the total long-term assets are $1,094,000 with a total assets of $1,778,000. We'll have to jump down the page because I can only fit so much onto one Excel page without it getting so small that you wouldn't be able to read what I'm doing on your screen. Starting with current liabilities, we have accounts payable right up at the top of the list in the book at $172,000. Under that, short-term notes payable of $70,000 is a little down the list. This is followed by wages payable at $77,600 and taxes payable at $47,000. Once again, the formula is already there, so the total current liabilities turns out to be $366,600. The next figure on the form is bonds payable. I trust that you have been checking all the numbers off as we go along. So we put the $307,700 into the form for bonds payable, and that gives us a total liabilities of $674,300. Within stockholders' equity is common stock of $400,000. You should remember that number as we were discussing it earlier in the problem. Also, we put additional paid-in capital of $240,000. That produces a subtotal of $640,000, kind of like we saw earlier. And the last unchecked item on the list should be retained earnings at $463,700. Our total stockholders' equity is now $1,103,700, and our total liabilities and stockholders' equity is $1,778,000. Notice that the total assets and the total liabilities and stockholders' equity are equal. This must be. In a double-entry system, these two numbers always have to be the same. One thing that I'll tell you now relating to the total assets and total liabilities and stockholders' equity being equal is that some of the problems in this book leave the retained earnings off of the list and expect you to calculate the retained earnings based upon the principle that the total liabilities and stockholders' equity are equal to the total assets. You'll then have to back into the retained earnings number.